Welcome back to your favorite podcast on the planet, Realty Talk. We're so excited to be here. To my left, Suzanne Seating, the queen of the closing table. And I am Paul Fix-It-All and fully embracing it, Hanson. We are the two hostess with the mostess of Realty Talk. And we're very excited. We have a jam-packed agenda today. Talk about a lot of things.
Yeah, things happening. What's happening in the market?
Well, broadly, 10-year treasury rates have ticked up a little bit. 30-year rates as of this morning. So I guess we should be saying when it is for our listeners. It is late April, and they're just over 6.3, so 6.35, 6.36 is what we're seeing. Interesting data. The few articles that were published over the last week, one was that month over month at a national level, we're down in terms of total housing transactions at a national level by 5%, 4.5%, 5%.
Yeah.
Normally the spring season, it gets busy.
Yeah, things pick up.
Yeah, so we have not at a national level necessarily felt that yet. There's a lot of questions or maybe reasons why, right? Is it oil prices? Is it the war in Iran? Is it rates being high? It could be all of those things. Mm-hmm. I've heard people talk about, a new Fed chair, like will rates be coming down in the near future in the summer?
Right.
When Powell's out, is new Fed chair going to come in, rip rates back? And, I think that's incredibly optimistic. I don't believe that will be occurring.
Yeah.
We've said that a lot on the podcast that we think there's a really strong argument rates will be somewhat high for a long period of time.
Right.
Not high, but
where they are. Yeah, yep. Exactly.
But, again, micro pockets. I know we're going to touch on a couple of other articles later, but we're feeling all the same stuff we've been echoing for the last year, which is, if it's move-in ready, if it's priced right, it should move pretty quickly. And I know we've got some data to talk about.
Yeah, I recently saw that it's 1/3 of homes that are hitting the market in fast selling markets are selling within a week.
Yeah.
And then the rest are kind of sitting for an average of, I think it was like 57 days. So it just reiterates what we've been saying, where it really has to do with how you're pricing and what everything, what the presentation is. I think, we have a great example. We have a property that just hit.
Yeah.
That we had 30 people through the open house this weekend,
yeah.
And all the feedback was really positive on the finishes, and so, we'll see. We expect offers coming in, and we can speak firsthand about that. But I think, it's just the same thing that we've been talking about for quite some time, that,
yeah.
If you're doing the right thing, which is why we have, products to support that and make sure that the properties that we are putting to market are ready to roll, and appeal to the most buyers that they possibly can. So. Yeah,
for newer listeners, my daily responsibilities, I run one of the businesses we run, Buy House is a single family value add investor. So we buy houses, fix them up, we sell them. And, we have deals kind of all over Southern California. And, we're a little bit different from, a traditional flipper, because they'll have a very defined buy box. And we do as well, but it's more nuanced. Most buy boxes are very dollar specific. I know investors that will buy only between the ranges of 600 and 800,000.
Right.
Or they won't touch higher end volume or whatever. And so we buy a little differently. Our buy box is essentially when we're certain, or we have really good data points to suggest that the investment makes sense, and we underwrite to a return on revenue.
Yeah. And
we target roughly 8 or 10%. And so that means that sometimes we'll have deals that are, if I think back at the last 12 months, our cheapest home we bought was like $514,000. And the most expensive home we bought was like just shy of $3 million. And we're not afraid to kind of dabble anywhere in between.
Yeah.
But what we're experiencing so far right now, year to date, is that, we had some inventory that was having a really difficult time trading at the end of last year that we've brought back to market and is traded. Actually, in a few of those at a higher price point, up to 10% more than where we were listed previously. But I've also had some inventory this year coming to market that is a head scratcher. Like it's in a great little area. There's not a lot of inventory. We're not competing with anything else. We're pricing it really aggressively. Finishes look good. And it's taking a longer time to trade. And so, I am somewhat confused when I ingest all this media on the market and stuff. And I saw the same thing, if it's move-in ready and it's priced correctly, 30% of the time it's gonna trade within a week. And I've got some assets that have sat for 4 or 5 weeks. And they check all those boxes. And so I think, the last month or so, I'm chalking it up to also, spring season is usually family season to buy. And we've just went through spring break, so we might be kind of coming out of that. But, to me, the most critical thing that we're really talking about is that America still has a lack of supply. And that's also why we haven't seen home prices really take a huge dip in most of the major markets. Some have, but some markets like Austin, for example. But we haven't seen a huge correction in housing value because there's still a lack of supply. So that supply problem is propping up values even with rates going higher.
Right. And, I've heard it from some agents as well that are out working these open houses and are in front of 30 different buyers. They are hearing a little bit of hesitation due to just, prices in general, affordability, gas prices, all the things, not knowing, uncertainty. So I do think, we'll probably see the data on that in a few months, of what is happening. Because we're feeling it. Yeah, we're feeling it real time, but the data doesn't necessarily support it yet. But I think it's definitely a thing.
I have really exciting news.
Ooh, okay.
This weekend, I got to pay more than $7 a gallon for gas. It was incredible. It was a really good experience.
I love that you are putting the positive spin on that. That, it's a record-breaking.
It was like $7.40 for diesel at the Chevron near my house. I made the mistake of not really looking at the price until I filled the tank up, and I was like, "Oh my goodness, $7.40."
The diesel thing may have backfired for you in the current situation.
It was really exciting.
Yeah. Ouch. Okay. Well, with that, I think we can jump into a celebrity segment because it's been kind of fun, these celebrity segments. I think there's so much to talk about with I don't want to say the failures, but the luxury market is really interesting.
It's dynamic.
And we've talked about it before because it's like sometimes there's like just a small handful of people that can actually afford one of these homes. So it's so interesting. And other times it's like the people that can afford that and will spend that money will just buy something and completely gut it and start over. So it's such a unique market. It's really interesting.
Can I come clean on something though before you go into this segment?
I would love for you to come clean on something.
I really look forward to this segment, and it's probably not the right thing to say publicly, but based on whoever the celebrity is, it brings me a lot of joy when one of them just gets absolutely creamed in a real estate deal. And other times I feel really bad because I'm like, man, I like that person.
I'm
not going to say who I like and who I don't like, but it is kind of fun to see the large dollar sums either being painful or being exciting.
I mean, I think the average person, when they think about that type of a luxury real estate, that they're just kind of seeing the glamour of it all. But it is actually super complex. Like we were talking about last week, to even just maintain a property like that, it's very expensive and there's a lot of effort that goes into it. So a lot of times consumers just see the headlines of like, oh, they bought this mansion and this is what it looks like. But it turns out to be a little bit of a mess. So,
Why don't you lead us? I'm excited.
Okay. So people may know this one because this one was pretty public, but I think the numbers are, what's kind of exciting here. So, or not exciting for Ben Affleck, but so the most expensive breakup move that we've ever seen in real estate. Ben Affleck gave Jennifer Lopez his share of their $60 million mansion for free.
In Beverly Hills.
So he gave his entire ownership stake. The home is worth around $60 million, which means he basically walked away from $30 million. And they did that through a modified divorce settlement agreement. And then, the craziest part is there was no buyout. No payout. Just that was the end of it. So I think we should talk about why he did that. Why do we think he did that?
Yeah. I mean, there could be a lot of reasons, right? I'm never going to get divorced. I hope my wife is watching and listening, for many reasons. But I had a mentor a long time ago, and most people say, oh, divorce is really expensive. It's 50-50. Like, you're gonna give half of your stuff away.
Yeah.
He said it's not actually 50-50. It's 30-40-30. So husband, wife get 30 and the attorneys get 40.
Yeah.
And attorneys are really angry and they get both sides all riled up and they do that obviously to drag their fees up. And no offense if you're an attorney and listening, we love all attorneys, even the ones that sue us. And but that benefits them. So it's not really a linear financial incentive for all the parties that are participating.
Yeah.
So I don't know if that was part of it. I mean, if you're somebody with a high net worth and you have an asset that's sitting there.
Yeah. I
mean, there could be a million different things. Like maybe he actually didn't like the house.
Yeah.
Maybe the upkeep was incredibly painful. This could have been a tax strategy too.
Yeah.
I mean, there's a lot of strategies and access to liquid is really important. And so if you have a somewhat illiquid asset, like a $60 million house, how many people can go and buy that tomorrow?
Right.
Instead of giving her $30 million in cash, if she really loved the house and he didn't, maybe that was a logical step for him. But
and I think if I remember correctly, the house sat on the market for a while. So they
tried to sell it.
Yeah, they tried to sell it, and they did not. So I think at some point it's almost worth just like you said. I mean, imagine what the attorney fees would be.
$1,200 an hour, probably on both sides.
Yeah, it's rough, and they're trying to drag that out as well. So I think it's sometimes it's just easier to walk away, and when you have that kind of money, and
well, they're also I don't remember when they bought that house. Do we know when they bought that house?
I don't remember.
Because that was likely before the luxury tax in Los Angeles,
true,
and that sits in the corridor. So anything over $5 million that sells now. There's an escalating fee. So there's an additional tax when you sell luxury real estate in LA, which, if you're sitting on a $60 million asset and you bought it 10 years ago and now you're going to go and sell, that's you're going to pay agents and escrow and title, transaction costs. You're going to be all in, call it 5 or 6%. So you go and add another 5 or 10% to that number.
Right.
I mean, you're just whittling down those dollars. So this may have been incredibly logical for him.
Yeah. Yeah. I mean, sometimes the best move is to just get out of it. I think we see that actually quite a bit, really just in the market in general, where sometimes the thought and almost like the ego of it takes over, where, we have homes that, I mean, we talk about it like it should sell for this price. And especially when a seller has really put their kind of heart and soul into a property and they're really connected to it, where, they don't necessarily want to drop the price. They feel like it should be selling for more. And, sometimes that's not the answer. Just, you got to get the money out and you got to move on. And I think we see that at all levels in real estate. So
what does this mean? I mean, we have a lot of listeners that are agents. What does this mean if you're a real estate agent? and you are in the luxury space, or you're trying to get into the luxury space?
I think if you're a real estate agent in general, it really doesn't matter what space you're in. You really have to make sure that you're pricing the home according to the market. And the market really does tell you. I think this is a good example of a home that sat for a little while, and he was probably like, all right, who knows? We're saying 60 million, right? But it sat at 60 million. So who knows what this home is actually worth? And going back to what we talked about, who knows who is willing to pay what for it and what small percentage that is. So, I am such a believer in the market really speaking for what the actual situation is. There, like you said, we have some properties that we're like, gosh, all the comps support our number. This doesn't make sense. Yeah. But that's not what the buyers are going for in the moment. So I think it's really important to do the research and just make sure that you're pricing the home correctly, because, that home is going to sell at some point. And I would definitely throw my hat in the ring for that one. But I don't.
Imagine if she sells it for like $70 or $80 million soon.
Oh my gosh. Yeah. You never know. You never know. She's pulled off less. So you never know.
That's a good segue. This is not on our agenda, but I want to talk about this luxury tax thing, because I don't know if you saw last week, we're not trying to go down a political rabbit hole or be on either side, but Mamdani, the mayor of New York City, is proposing a luxury tax in Manhattan transactions for second home sellers. So if it's not your primary residence, I believe.
Yeah.
It may be primary residence too, but it's pretty beefy. I think it's up to like 10 or 15% depending on the price point.
Right.
And I just it's a head scratcher to me. When LA did this, I was looking at it and trying to understand what they're trying to accomplish.
Yeah.
And how the math breaks out. So, the way it works in LA is if the house sells for 4.99999 repeating, then you don't pay this extra 5%. The minute it goes over that $5 million mark, you pay 5%.
Yeah.
So if you sell the house for $5,001,001, you're actually getting 5% less.
Yeah.
Than selling it for $4,999,999.
Right.
And there's a lot of games in there, right? So you'll see a house listed at $4,999 with a $1.5 million purchase of furnishings and paintings and things of that nature. So they're still selling the house for $6,500, but they're evading that tax. But to me, when you look at what's happened in LA so far, luxury transactions at that higher price point are down significantly. Right. I don't know the percentage, but almost a screeching halt.
Yeah.
And so if you're the mayor of another city like New York, and you're looking at it and going, oh yeah, this is going to be a way to bring extra tax revenue back in, and we're going to balance budget and do all this other stuff, wouldn't you go back and look at other states that have done the same thing?
Yeah.
Or what's your opinion on this?
I don't know. I seeing it firsthand and seeing it, to me, it feels like things are still getting done, and it really didn't accomplish much because, as you said, there are so many like loopholes and things that people are doing. I think transactions are down just in general in this space. I don't know if I definitely know that it has deterred people from wanting to buy and coming in, for goals. So I think that is definitely something that should be top of mind, but I kind of feel like people are always going to find a way, and so I don't know if that's the answer. And I would like to see long-term, like what comes from all of it, because I think we started this like a year and a half ago, was it maybe? Yep. So, I don't know if there's enough data yet to support like what the actual, results have been, I guess, in my opinion. But we do know the sentiment of it, and we do hear about it. But I don't know if it actually deters anyone. I don't know. The people that want to live in LA want to live in LA. I don't understand it because I'm I like visiting, but not an LA person. But I kind of feel the same about New York. Like the people that want to live there, like they're.
You don't want to pay like $1,200 a month to park your car.
It's just not.
Or in
for
LA,
me.
you don't want to.
It's not the big city life.
You don't want to spend 35 minutes to drive a mile.
Yeah, no, thank you. No, thank you. But they would argue you should walk in New York. They don't argue that in LA, but yeah.
New York is great. Right out of college, one of my first businesses, we had a business in New York, and I lived on the Hoboken side in Jersey. Mm-hmm. But it cost me $480 a month to park my car.
Oh yeah, that's rough.
Yeah, but the lifestyle is awesome. You don't really need to drive. I mean, walk, ride the subway.
Yeah.
See some interesting things.
Yeah.
We don't really get that life in LA.
Yeah. Yes.
Okay, so that is all of the items on our agenda that we were interested in talking about. Any other thoughts or items you want to address to the public, the millions of listeners?
I think we have to. I think we have to revisit some of our. We need to bring on our guests to discuss our cat situation.
Oh,
so I think that's going to be like within the next 2 segments. We're gonna have our. We're gonna unveil some updates on our cat stories.
It's exciting.
Yeah,
I can't wait.
I know.
There's nothing else on my side other than I'm really excited to see what happens this summer. I mean, I think, optimistically, the market looks like it's going to be status quo, which is a really good thing for investors. So, and I think we have some really great updates on the brokerage side coming up. A lot of interesting things.
So much happening. Yeah.
Cool. Well, that's a wrap. If you do not follow us currently, please do so. Hit the little subscribe button that's on your screen. It helps out a lot. Send this out to all your friends, family members. If there's a real estate agent that did you dirty on a deal, send it to them. We want their input. And we love all of our listeners. Thank you very much. And we will see you next week.
See ya.